Yes, Nagaraj, you are
Hi,
live. We can start.
yeah. Hi, good evening, friends. This is Nagaraj, one of the technical research analysts at HDFC Securities. Friends, we'll start a midweek market outlook and we'll discuss the about markets, Nifty, Bank Nifty, and some prominent sectors. And also, we will discuss about the market outlook, technical aspects from the smaller time frame to larger time frame. I have with me my colleague Atul Karwa, who is going to speak about the fundamental calls recently issued, details about the calls in a fraction of few minutes. So, friends, first we'll start. I think my chart is visible. This is the market view for the day, and beginning just start to before starting this session, I would like to recollect the what we have mentioned in our weekly report. Last time we have mentioned that market is stuck in a range, and at the lower levels 19300 is a strong support. If supports breaks on the lower side, then the 19100 to 19000 is going to be the strong support we have mentioned. At the same time, we have said that 19700, this trend line was a hurdle for the market, and we were showing low tops and bottoms initially, and the upside breakout of this hurdle could bring the upside momentum in the market. So we had given the lower supports of 19300 to 19100 on the upper side, 19750, 650 to 750 was the resistance, as we mentioned in our weekly report. In the last few weeks, something has changed in the market. Market has bounced back today. So, friends, what we can observe in today, this is an intraday chart of today's session. Market was moving in a consolidation pattern, range bound action, and today morning it witnessed a downside breakout of the consolidation movement, but again moved up. This was some significant pattern as per intraday. Whenever the technically we believe that after the negation of this, some pattern will lead to a good amount of upside on the opposite direction. This was still here. This was the downside breakout of the intraday resistance, intraday support, and after that, this downside breakout has been negated. Market moved up. Friends, on the daily chart, we have seen this candle, kind of a small candle with long lower shadow, which is indicating positive bias. Previously, what we have seen is the lower tops and lower bottoms over the last couple of weeks. We have seen lower lows, and this time market has failed to show any lower low so far this week, because today we had seen the decline, but our market has recovered sharply from the lower levels of 19,465 and currently placed at the edge of the hurdle. What the whole chart pattern indicates that this is going to be a very strong resistance. 19650 to 19700 is going to be a strong resistance. Any move above this hurdle decisively, that could open a sharp upside momentum for the market. On such scenario, the whole negative setup of lower tops and lower bottoms will be negated, and this negation will have a could have a sharp positive impact, and that could lead Nifty towards the initial resistance or initial new highs of around 19,990 or at 20,000 levels. This is the pattern which has developed over the last few sessions. On the weekly time frame, what we can observe, a strong up move, sharp up move over the last many months since March. April to July, market has been continuously moving up without showing any reasonable correction. Recently, we have seen the top market topping out around 20,000 mark and the correction. If you compare this move to here, from here to here, this last 2 weeks of correction seems to be a healthy correction. Market is more of a consolidation phase, and rather than any sharp downward reversal from the top. That is what exactly happened. The 10-day EMA, which was around 19,200, somehow market reacted on the upper side from the 19,300 levels in last week, and this week we have seen the upside momentum continued. So this whole pattern is indicating that market is not willing to show any sharp kind of a negative reversal or a top reversal pattern. As of now, whatever the market is showing, the consolidation or a range bound moment, weak bias is buying on dips opportunity. So market sustains above this level around 16,000, 19,300, 400 levels, then we are likely to see good amount of up move. At the same time, The 19,700, 650, 700 is going to be a strong resistance. A move above that resistance is likely to bring sharp upside momentum in the near short term. But on the banking stocks, banking sector, this is a bank Nifty daily chart. Banking was a lagging in today's session. We have seen after this decline, the bank Nifty has moved into a kind of a range bound action. This is indicating that bullish hammer type candle pattern forming, but the placement of the pattern is not that valid, that right. And we continue to mention that this is a range bound action, and this 20-day EMA, 10-day EMA making synergizing together at around the 45,090, 45,100 levels. This becoming a cluster resistance right now, and a breakout of this cluster resistance could open the upside target of 4550, 45,500 to 46,000 levels in the near term. At the lower level, 44,500 is going to be a strong support for the market, for banking stocks, for the banking sector. So let's move into a broader market. Broader market mid-cap, Nifty mid-cap has been in a continuous uptrend. The uptrend after one session of decline here on 2nd of August, this broad market index continues to move on. So what we can observe on the chart is 10-day EMA and 20-day EMA are playing out. This broad market index is continuously taking support of 10-day EMA. It has violated the support quite a few times, but regained its upside momentum and recently showing placed at the higher levels. Same thing with the small cap. If you look at the small cap index, the similar kind of a moment is visible. This is the 10 and 20-day EMA chart, which are offering supports continuously, and we can observe that higher tops and higher bottoms in both the Nifty mid-cap and small cap sectors. And this 10-day moving average has acted very strongly, resulting in upside bounce in the mid-cap sectors. So after this of one session of weakness, small cap has continued its up move. Now we'll see something about sectors. On the sector front, recently we have seen IT sector was outperforming. We have mentioned in our in our weekly report that IT sector was showing some good positive pattern. This is a consolidation pattern, larger consolidation pattern, and currently IT sector is placed at the upside breakout of this pattern of around 31,400 levels. The whole chart pattern is indicating that if IT sector is sustainably moving above this 31,400 levels, we are likely to see sharp upside momentum in the IT sector, which is leading to IT prominent stocks like influencing the IT prominent stocks like Infosys, PCS, HCL Tech, and etc. At the same time, media is the one that has moved up. We can observe a rounding type of a bottom pattern in the media, and currently placed at the hurdle of 2175. So on the daily time frame, after a small consolidation, it has moved up, and on the weekly, some kind of a rounding bottom is developing. This is positive indication for the media. At the same time, other two sectors like PSC and PSU banking are looking positive. PSC, look at the chart of daily, continuously moving up. Higher tops, higher bottoms is intact, placed at the support of 10-day moving average, and currently making an attempt to move above the initial resistance of around 5450 to 5500. So in coming days, I think I'm expecting this PSC sector to outperform. At the same time, another sector is PSU banking. So we have seen PSU bank stocks are buzzing recently over the last couple of sessions. After showing a minor downward correction, this PSU banking has moved up sharply in last session, and today it has showed consolidation pattern, but overall trend remains intact for PSU banking. So on the weekly chart, PSU banking, after showing a negative pattern in last week, it has bounced back smartly from the lows of from the support of 10-day EMA and currently placed near the highs. So other sectors like realty, realty was showing a weak trend. This is a weekly chart of the realty. What we can observe is a negative pattern has formed in last week, kind of a bearish engulfing pattern, not a classical one. And after that, this week has started with a negative note. This was the This is the daily time frame of the realty sector. Actually, the 10-day and 20-day moving average was continuous in support for this realty sector. Recently, it has broken. After showing a consolidation pattern, it has broken below the support. So I'm expecting further consolidation in realty sector, and on the weekly and daily, it is showing a negative trend. Some consolidation or a minor weakness is likely. At the same time, another one is FMCG sector. Chartically, if you look at FMCG was in a range bound action, sector was in a range bound action. Today made an attempt of upside bounce, but the overall chart pattern is looking still weak, placed at the support of 10-week EMA, and I'm expecting we are likely to see some more consolidation or a downside breakout in the IT sector. So these are all the sectoral and market outlook. Once again, we'll conclude this technical view on the market. So market trend still is choppy, range bound. We have seen weakness from the lower highs. We have seen the lower top and lower reversal, lower bottom reversal. But currently, market has placed at the some important junction. Today's upside recovery is indicating that something on a upper side is cooking in the market. So I'm expecting upper levels of 19,650 to 19,750. 650 is already reached. 19,700 to 700 to 750 we can consider is a strong overhead resistance, which is a down sloping trend line. In any case, if Nifty surpasses above 19,650, 19,700 levels decisively, then we are likely to see a good amount of up move. Even we could see the Nifty reaching towards the recent high of 19,990 or a 20,000 mark in a quick period of time. Any further consolidation or weakness from here is likely to find support around 19,450 to 19,300 levels, and below this 19,100 to 19,000, the 10-day, 10-week EMA, and also the support as per the concept of change in polarity is intact. So this is from my side. Now I'll invite my colleague Atul to discuss about the fundamental calls that we have issued recently.
So good evening, everyone. I am Atul Karwa. So the domestic equity markets seems to be taking a pause after a strong rally in the past 3 to 4 months. On one hand, global headwinds like interest rate hikes by the Fed, ECB, and Bank of England, slowdown in China, higher crude prices, and the recent US credit rating downgrade leading to cautiousness among FIIs who have turned net sellers over the past few weeks. While on the other hand, domestic institutional investment continues to remain strong. So among domestic macro factors, we have the RBI monetary policy tomorrow, which could dictate the trend of the market in the short term. The consensus is for the RBI to maintain its repo rate as inflation has moderated and is within the comfort band of RBI of 2 to 6%. So on the fundamental side, we have released 3 reports this week. The first one is Scient, which is an IT consulting and software company. So the Q1 results of the company were pretty good. The company has added 20 new clients in Q1 FY24 with an order intake of around $193 million. And the management has guided for 150 to 250 basis point improvement in its EBIT margin. So the stock is currently trading near a recommended price of 1562, and our targets are 1695 and 1816 over the next 2 to 3 quarters. So our next recommendation was the Indian Hume Pipe Company. So the company specializes in the execution of turnkey water supply and sewerage and sanitation projects. So the current government focus on drinking water, irrigation, and Swachh Bharat has resulted in a strong demand and robust order book for the company, which is currently 2 times of its annual sales. So the stock is trading slightly higher than our buying band, and our targets for the stock are rupees 305 and rupees 327 over the next 2 to 3 quarters. We have also come out with a report on PSP projects. So PSP is an infrastructure construction company having around 50 ongoing projects currently. So its book to bill ratio is almost 3 times of its sale, and it has a bid pipeline of rupees 6,000 crores. The company has recently completed the Surat Diamond Bourse project, which has made the company eligible to bid for a single project of a size of rupees 2,500 crores. So these are key positives for the company, and our targets for the stock are rupees 850 and 908 over the next 3 to 4 quarters. So all these reports are available on our website. You may go through them and recommend to the clients. You can also find the list of all our open fundamental calls in the weekly report sent on Monday. So that's all from our side. We can take some questions now.
Yes, thank you, Atul. If there is any questions, participants can write. Yes, one question is coming. How do you see the market considering the 4 elections? Yeah, one question is coming from Rahu San. How do you see the forecast for the market considering the 4 elections in this year end? Hi, Raghu. The overall trend of the market remains up. We are continuously coming out with the reports, daily reports, weekly reports, and even monthly reports. We have mentioned that the correction, whatever we are seeing over the last few weeks, is a temporary. And after the corrections, we are likely to see the upside momentum building up. At the lower levels, we have seen the supports taking place at around 19,000. 19,300, below that 19,100 to 19,000. And on the upper side, we are likely to see Nifty reaching 20K mark, even going above in the long term. The second question is Sanjay Thakur. How do we have a mid or small cap chemical company recommended? So individual stocks will not take it in this forum. You can directly mail us, contact us. We will answer you on over the mail. So another one, stocks, Pioneer Embroidery will not take this one. What is your view on oil and gas sectors? Yeah, Rohit Pal Singh is asking what is your view on oil and gas sector? Currently, oil and gas sector is showing consolidation moment. There is no clear-cut upside momentum is building. The main primary trend remains up. The current consolidation and or minor weakness in the oil and gas is going to be a buy on dips opportunity in the near term. And the next one, how do we Parth Bhatt is asking, how do you see tire and pharma sectors to perform in the next 3 to 6 months? In the tire, particularly tire sector has seen sharp declines, and it is showing a consolidation moment, made a bottom reversal recently, consolidation moment at the higher levels, and we are likely to see upside continuing. But pharma is outperforming. Pharma, healthcare sectors are outperforming, continuously moving up. We are likely to see a continuation of upside momentum in these 2 sectors. Rohit is asking especially OMC stocks. So OMC stocks are currently showing consolidation moment in a weak trend, and I'm expecting this consolidation is likely to find support, and we are likely to see some upside bounces in OMC stocks, major OMC stocks in the near term. Can you please share the view on chemical sector? Chemical sector, you can send us the request mail. We'll give you the inputs on the chemical sector. Okay, that's all, friends. That's all from our side. Thank you. Thank you for attending. We'll close the session.